Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good weekend, all. Ira Epstein of Linn & Associates with your metals market update. And this is the weekend edition for Friday, the 27th of April, 2018. And we're right now about 3:30 p.m. Central Daylight Time as I'm recording. As you can see, the stock market finishing the day down. Metal markets actually were a bit lower than this in the silver and the gold on the settlement price, but they don't put up the settlement prices on these boards until 4 p.m. The settlement, though, is determined 12:30 p.m. Central Daylight Time. Dollar down a fraction today, a little bit of a bounce in the markets in terms of the currencies. But here's what we have to worry about. May 1st is right in front of us now. Will the tariffs go ahead that the president has threatened? How is the market going to react to that? The copper market down today a whopping at 1 point, nearly 9 cents. I have to think that is all to do with the tariff news. We saw today also that Angela Merkel, the Chancellor of Germany, was in town. She visited with the president. Not quite the same reception that the French president got. Did you see it? It's definitely not the same thing. Where's the state dinner? What, did they take her for a lunch in the cafeteria? I don't understand. But, you know, everybody's pressing the president to not back out of the Iranian deal in some manner or pull out of it completely. There's talk maybe there'll be another deal behind it to put sunset clauses, a different way in it, some more controls on ballistic missiles without having to kill this deal. Seems to me that they got 12 days, maybe 15, to get something done right away. And if not, this president's told you what he's going to do. He's not a man to be messed with. He seems to pretty much do what he says he's going to do. So we'll see what that means. It hasn't been overly friendly, though, for the metal markets. If we look at gold on a monthly chart, just a monthly chart, you keep running into the resistance, into this 1365 area. I've read many reports that talk about why that is. There seems to be one group out there that thinks this is where Venezuela's been dumping oil. They at one point had 21 billion in gold reserves. They're down to approximately 6 billion or less at this point. They're using that to buy blends of oil on the open market because their oil needs to be blended in order to sell it. A lot of problems. Whatever or whoever, it may not be them, is holding the market back. That's what's going on. To get this market really getting super bearish, you got to get it under the 1268.80 level, the 18-month moving average of closes. But I think you'd put real fear in the people if you took out 1303. When we look at gold on a weekly area chart, just the weekly area chart of closes, you've pulled back under that point. So the bias of the market is turned again back down. I'm going to call the market with this original down thrust right here that we went into. Now it has the bias down with it. When we look at a chart and we just stand back, I don't think you can say it's anything on the weekly chart. I think the market is caught between this 1300, this 1365 range and sort of stuck in there. When you look at the swing lines, what the market's finally done, and it did damage to itself this week, we got down to 1315.70 this week. If I take this week off the chart, you had a pattern of higher lows and higher highs. You took that out with this now. So you're no longer in the bullish camp on the swing line. In terms of moving averages, you're under the 18-week moving average of closes, which puts into play then either the 100-week, right here in green, 1276.20, or the Bollinger Bands, whichever's closer. In this case, the Bollinger Band is much closer. Right now, it's at 1304.80. So in order for the market to get to the next level of support, you obviously got to go through the nearest level being that number. At the very least, the market is neutral, and you're starting to get the die cast for further downside because momentum is pointing down. So on this chart, while I don't have a trend, I have a bias that's down. You closed under the 18-week average. Momentum is down. You're narrowing in these Bollinger Bands. Often when you narrow them in, they spin around and try to make money, and that is the most difficult thing because you don't follow through one way or the other. In the silver market, you have still got a pattern of higher lows and higher highs. So if you would call it, the trend has been up. However, it's completely countered and knocked out because you closed under the 18-week average of closes. When you have the bias down because you do that and the trend up as measured by the swing line, the two counter each other. In terms of momentum, you could be getting yourself set for a down thrust. This is the battleground, 1670.5. You saw the market got up right into here. If we go back to this high, we got to 1736, which was the 100-week average. If you had the 200-week average, you'd also see what went on in that. I don't need to show all this. I show it during the week, on the daily charts. And you ran into a lot of resistance. Have you thrown in the towel? Nah, I don't think you've thrown in the towel, but you've lost your bullish enthusiasm for both silver and gold at this point. Copper market, failing miserably against this 18-week moving average of closes. But when you look at the bigger picture, and you see the sideways action in the Bollinger Bands, and that's these numbers here. Before I get too far, what is a Bollinger Band? Well, a Bollinger Band is an algorithm designed to keep the market trading within that band 95% of the time. Often what happens is the bands start going sideways and price spins in them. Eventually it breaks out one way or the other, and that's when trends come. So another way to look at this is often markets are trendless and they're looking for a trend. That's what they want to do, and you really haven't done one in a very long period of time. I would comfortably say this market hasn't been trading since December of last year, trending one way or the other. You're getting no follow-through, upside or downside. Yeah, I realize that on the day chart you're getting those little bit of swings, but you're not really getting the big move yet. When I look at the platinum, I'm in a downtrend. I have lower highs, had it in place. Had lower lows, have had this all in place. Next target could be 894.30. Momentum is still down. Bias is down. Resistance back up at 963 to 971.70. This, to me, is a bear market. When we come to the palladium, I don't have any trend at work at all. I've got a lower low, market that rallies back to the 18-week average of closes and falls flat, and momentum is its divergence. You're trying to push up the price, but prices are falling. All kinds of divergence. Probably what's hurting these markets has been the rally in the dollar index. Now on a weekly chart, not a daily, on a weekly, this is the first challenge that you've gotten up to the upper Bollinger Band. Let me repeat, Bollinger Band. Generally, the first challenge, be it to a downside, upside, the first challenge is often where the market sees support on the downside, resistance on the top. Then often you will get markets that run on one band or the other if they start a deep trend. This is a heck of a trend. And now what we've done is a market that has rounded itself. I know that the trade of the year that people thought was to be short the dollar for this year so far, they're not doing well. I read about it last week in Barron's and some of the other as to where the traders are. We'll see what happens, but you're in a resistance area. What I try to do for you with my market research is cover this in a way that you understand it. So in my research, I'll put out daily commentary and trade recommendations. You can get it in all of our products, and I send it by email. Doesn't matter if you're on a tablet, a PC, a mobile phone, you're going to be able to get it. Then, this is how my subscriber video works. Now, let me tell you what the subscriber video is. I start you off in the morning, every morning at 8:30, I record 40 charts. I'm not in that recording. I'm doing it on my screen. I'm throwing out day trade, position trade ideas, what I think the pros are doing, exact buy and sell ideas, and I'm reinforcing everything that those that take my charting course learn. I go through everything there every morning. It helps me put out the recommendations. It sets you up for a trade day. At least that's the goal that I have. So when you start putting this all together, you'll see me talking about it. The numbers are flashing on the chart because it's live. Then at 11:30 in the morning, I have a written update that goes out. I'm taking a synopsis of what I'm seeing during the day. I'm really compartmentalizing everything for you as a trader with buy and sell recommendations as well. For those of you that use a study called window envelopes, I even put those out. Audio commentary. Some people want that commentary twice a day. Typically, that's Monday through Thursday. I'll put out 2 audio commentaries a day. Then Friday, 1 in the morning, and I start again Sunday night. That's also included in my research. Other people on the research say, Ira, I love it, but I just want commentary only. I don't want your written recs. Fine. What I do then is I lower the price of this dramatically. But on the free trial, what you can do is you get to see it all. And when I say dramatically, for the commentary only, you can buy a year's worth for $240. So I think that's pretty reasonable if you think about it, $20 a month. Take a look. Give us a call. You can go to our website by going to www.iraepstein.com. You can click up here, and it'll take you right to our form page. I'm not asking you to buy, but if you want to buy, it's on the website under research. I think you'll find it well worth your time. And again, I try not to break the bank, but I give you an awful lot of research best I can. I'm Ira Epstein. You have a great weekend. I'll see everybody Monday. Take care.